Yeah.
So we are doing like the October-November 2023, paper 32. Okay. So variant 3, it's your paper 3. You will have all the FA questions. In October-November 2023, what are the things that you had? Question number 1 was for manufacturing. Question number 2 was clubs and societies. And question number 3 was cash flow. Are you with me?
Yeah.
So what we are going to do is the question number 1, the manufacturing company. Can you please read the question for me, please?
Sure. HPLC is a manufacturing company. It has applied a rate of factory profit of 25% for some years. Its draft statement of profit or loss for the year ended 30 June 2023 was
When
as
they say
follows.
that this is a draft statement of profit or loss, it means that it is not the actual statement of profit or loss.
Yeah.
Are you with me?
Yeah.
It can have some errors, but I am not very sure. Okay.
Right.
Before reading the ahead question, always see in your question paper what are the things that they actually want you to find out. So while reading, you can see, relate to that information that you actually want.
Right.
So what do they want? They want opening inventory, cost of production, and closing inventory
At cost. Yeah.
at the cost. At cost means what?
Without the factory profit.
Without the factory profit. Lovely. Come on. Read.
Miss yeah, miss the inventory of finished goods at 1st July 2022. It says
Okay.
25,000.
So inventory, opening inventory is 25,000.
Mm-hmm.
And they want the opening inventory at what?
At the cost at cost.
Huh?
At cost.
Okay. So how will you find out?
You remove the factory profit of 25%.
Hmm?
Miss, you remove the factory profit.
Okay. Yeah, so how?
Miss, so 25% of 25,000.
Okay. So factory profit is 25% of the transfer value.
Right.
Okay. So come on,
Miss,
calculate.
so it'll be 25,000 divided by 125 into 100.
Okay.
So it's 20,000.
25 divided by
25,000,
125.
yeah, into 100.
Okay. Can you give me the calculation how? So this is the transfer
25, yeah.
value. The
Mm-hmm.
costs add profit gives you the transfer value.
Right.
This is 25. So transfer value will be 125. Cost will be 100. Are you with me?
Yeah.
Okay. I want to find this. Opening inventory is 25,000. So 25,000 into 25 divided by, no, I want to find 100, right?
Yeah, miss.
So 25,000 into 100 divided by 125.
Yeah, miss. You've got the same answer.
So 20,000 is the cost of your opening inventory.
Yeah, miss.
What will be your, you will do this calculation, huh?
Yeah, miss.
25,000 into 100 divided by 125.
Yeah, miss.
What will be your cost of production?
Cost of production is 237,500.
It is a transfer value and they want at cost.
Miss, you'll have to apply the same formula.
What?
Miss, the same thing you applied right now, like you have to find the cost for it.
Into 100 over 125.
Yeah.
So it will become how much?
190,000.
And for finished goods,
For finished goods, it's 20,000.
so it will become 22,000.
Oh, okay, yeah, 22,000. Yeah, sorry, finished goods, 22,000.
Okay, fine. So this is with this, we've completed the first part of the question and we've got 3 marks for this.
Yes.
Now, what do they want us to make? They've given us some
Subtracted
additional
statement.
information and they want
Yeah,
us to
miss.
make a corrected statement of profit or loss.
Yeah, miss.
So corrected statement of profit or loss, that means do they want us to make the manufacturing account? Do
No.
they want us to make a manufacturing account or no?
No.
Yeah,
Miss.
I can't hear you properly.
Yeah, yeah.
Do they
Miss, they
want
do.
us to make a manufacturing account or no?
Yeah, yeah.
Profit or
Miss,
loss?
can you?
Do they want us to make a manufacturing account or no?
Mr. Wouldn't want you to make one.
Sorry,
Mr. Wouldn't want you to make one.
can you speak more louder?
Miss, can you hear me?
Do they want you
Miss,
to make a manufacturing account or no?
no, miss.
Okay, fine. So that means they want a statement of profit or loss and it will start from where? Revenue.
Miss. Yeah, yeah, let's start from the revenue.
Okay, fine. Before I go ahead and I read, okay, I need to know because they've asked me to make corrected ones, that means they have done something wrong here.
Yeah, yeah.
Are you with me?
Yeah, miss.
Come on, read. They've given me opening inventory at transfer value. This would is correct. Closing inventory is also at transfer value. Finished goods is always at transfer value. And finished goods is always included in your income statement or in the profit or loss account at transfer value. Is there
Yeah,
any
miss, right.
issues with this?
No.
No. Go ahead. Read.
Miss, and yeah, then the additional information. Miss,
They
they
want
give us
to
cost
read
of
what
sales.
is there
Yeah,
over here also, right?
yeah,
Revenue,
miss.
cost of sales, gross profit is given. Factory profit
Mm-hmm.
is added to the gross profit.
Yeah,
Okay. Then they have some expenses.
yeah, miss.
And this is over here and this is the profit for the year. This is what they've given us. And they said that this profit is wrong.
Yeah, miss, right.
Okay, fine. Now read the information that they've given you.
They first say that the inventory values and cost of production were all shown at transfer value. The increase in the provision for unrealized profit was included in the admin expenses.
Hmm.
And then they give us additional information. After preparation of the draft statement of profit or loss, the following items were discovered.
Hmm.
First is the admin expenses included 12,000 of costs,
Okay, first read
which
this
were
one. Is this part correct or no?
the inventory value and cost of production were all shown at transfer value.
Okay. Is it correct or no?
Yeah, yeah.
Okay, fine.
Miss, and the increase, yeah, the increase in pupa was included in the admin expenses.
Is increase in pupa part of administrative expenses?
No, it's not.
Okay, fine. Now additional information.
Admin expenses included 12,000 of cost which actually related to the factory.
Okay, so
So we have to subtract
administrative
12,000.
expenses includes 12,000 of cost. What will you do?
Subtract it
From where?
from the admin expenses
Okay,
from
I'll subtract it from
40,500.
the administrative expenses. So I will minus 12,000 from here.
Right.
Okay, this includes of what?
It's cost related to the factory.
So if it is cost related to the factory, that means it should be added to the cost of production.
Yeah, right.
Yeah.
Yeah, miss.
What is the cost related to the factory?
It says 237,500 as of now. So we have to add 12,000 to that.
Okay, let me just keep this on hold, and I would say 12,000 is factory costs.
Yeah,
Okay, we are keeping this on hold, okay, for now.
okay.
So I have to make working note also. So I'm making my working note number 1, that is related to what?
That is related to the cost of factory.
No, administrative expenses.
Okay, yeah.
So administrative expenses would have
Less 12,000.
40,500 minus 12,000. Since you've
Yeah.
minus this 12,000 over here, you have to add it somewhere.
Yeah, miss.
Okay, you have to add it somewhere and keep that in mind. Do you know your cost of production?
237,500.
Okay, this is the transfer value. But factory cost
Right.
is first added and the transfer value will change, right?
Yes, so we'll have to reduce the value to the cost.
Cost of production I'm finding. Cost of production, we already found
Yeah,
the
we found it.
cost,
190,000. Yeah, miss.
190,000.
Yeah,
This
miss.
excludes the factory cost.
Yeah, miss.
So 12,000 I will add over here.
Yeah, miss.
Okay, fine. Just keep that in mind.
Yeah, miss.
Read ahead.
During June 2023, goods were sent to customer on sale or return basis. The
Come on. Now read the next part. Second adjustment.
yeah, miss. So it says during June 2023. Okay. During June 2023, goods were sent to customer on sale or return basis.
Okay.
The goods had a
What
selling.
is the concept of sale or return basis? Do you have any idea?
Yeah, miss. So it's like when you give the goods to your customer, and it's not like 100% sold. It's only sold if they're able to sell it further, and if they aren't, they'll return it back to you.
Okay, so if on the date of closing you do not know whether the goods have been sold or no, so what do you do?
Miss, you don't count it.
You don't count it as sale, so you will remove it from your revenue
Yeah, miss.
at selling price,
Mm-hmm.
and you will remove it from your closing inventory.
Yeah.
Since it is a manufacturing sum, so you will remove it from a closing inventory at transfer value.
Yeah, miss.
Yes?
Yeah, miss.
Yes or no?
Yeah, miss.
No.
Miss what? Yeah.
Okay. So what were the goods which were sold on sale or return basis?
Miss, miss, sorry, what do you mean? I didn't get your question.
The goods that were sold on sale or return basis, what is the value of those goods?
Miss, they had selling price of 3,000.
So from
Cost
where will you
was
remove it?
1,400. Miss, you'll remove it from revenue and the closing inventory.
So you will remove it from the revenue. So from the revenue, how much you will deduct?
3,000.
3,000. This is for adjustment number 2.
Yeah.
Correct?
Yeah, miss.
And from where? What was the cost of
Miss,
these goods?
closing inventory, you'll subtract 1,400.
But closing inventory is given to us at which valuation?
It was a transfer value. Miss, it's a transfer value, yeah?
Okay, this is the cost. So can you give me the transfer value of this inventory?
Sure, miss. You'll add like 25% to it.
Okay, so 1,400 is the cost.
So it'll be 1,750.
How much?
1750.
1750.
Yeah. Miss
Okay.
1750 is 10, miss.
How much
Not
is the transfer
1750.
value?
1750. You add 25% to it, yeah.
Yeah, so total is how much? Okay, total after adding 25% is
1750.
total is 1750. So what will be your value of the closing inventory?
That's okay, so you subtracted, so it'll be
You will add the
2750.
1750. So the value of your closing inventory will become how much?
Miss, I'm adding it.
Okay. So
Miss,
now
it's
what you will do, your
29,250.
working note number 3, I'm putting for revenue.
Yeah.
In your revenue, you have 370,000 and you minus
Yeah.
3,000 for sales or return basis.
Right.
Okay. Your working note number
Yeah.
4, I'm putting for closing inventory.
Yeah.
Your
Miss.
closing inventory was 27,500 and in that you will add the sale or return.
It'll be 29,250.
Hmm?
It'll be 29,250.
So 1750. So this will become 29,250.
Yeah.
Okay. Go ahead. Read the next part of this adjustment.
A delivery van had a carrying value of $17,000. The
Hmm?
review on a delivery van
Voice
had a
is not
carrying va-
audible at all.
a delivery van had a carrying Mrs.
Come on. Go ahead.
Okay. So a delivery van had a carrying value of $17,000. A review on 30th June 2023 showed that it had a fair value of 12,500 and a value in use of 13,000. No adjustment had been made as a result of this review.
Okay. So what is the telling? What are they telling you basically?
Missed that you had overstated the value.
Overstated the value means what?
Miss, it means that you're not counting your expenses.
Okay. Delivery van has carrying value of how much?
It has a carrying value of 17,000.
Okay. It has carrying value of 17,000. What is the fair value of it?
1200.
Okay. Carrying value is 17,000. Fair
Mm-hmm.
value is
12,500.
12,500. And value in use is
13,000.
13,000. Come on, tell me the value that you will take.
We'll take 13,000.
Sorry,
13,000.
why?
Miss, because it's the value in use.
Okay. What is the rule for impairment?
You take the fair value.
Hmm?
You take the fair value,
Think properly.
right?
Think properly. Yeah, tell me, when is your asset set to be impaired?
Miss, an asset is set to be impaired when the carrying amount is greater than the recoverable amount.
Is greater than the recoverable amount. And how do you get the
Right.
recoverable amount?
Miss, which is the greater of fair value or value in use?
So recoverable amount is greater of fair value or value in use. So recoverable
right.
amount is 13,000. Carrying
Hmm.
amount is 17,000.
Yeah, miss.
You have an impairment loss.
Right.
How much is impairment loss?
Miss, 4,000.
17,000 minus 13,000, 4,000 is your impairment loss. So
Yeah,
4,000
miss.
is your impairment loss. Where will you write this 4,000?
Miss, Miss, probably in expenses,
Which expenses?
admin.
Which vehicle is this?
Oh yeah, it's delivery. So like, yeah, it's distribution.
Which vehicle is this?
A delivery vehicle.
Delivery vehicle. So where will you put it?
Distribution costs.
In the distribution cost, where will you add it? So your expense of the distribution cost is going to increase by how much?
By 4,000.
4,000. So I'm putting my working note number 5 as distribution expenses or distribution costs.
Yeah,
So
miss.
distribution cost will become 31,000
Yeah,
plus
miss.
4,000. What is
Yeah,
this?
miss.
Impairment
Miss,
loss.
impairment.
And if they ask you to make a statement of financial position, then
Sorry,
if they ask you to make a statement of financial position, then
miss. Then you'll have to like consider the loss in it.
that 13,000.
Yeah, miss.
Okay, fine. Adjustment number 4.
The company was facing legal proceedings in July 2023. The company's lawyer had advised that the company had a 35% chance of having to pay a fine of $8,000.
So this is related to what? Which IS?
Miss, IAS 36,
IS?
36.
Which IS?
Miss,
IS which one?
I'm not sure.
Provisions?
Right, 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 right. Yeah, provision was, Miss 37,
IS 37. So you're
right?
facing a legal proceeding and your lawyer has advised that there is 35% chances of paying the fine.
Yeah, miss.
If it is 35% chances, then means what?
That means like they have 35% chance, so it's kind of a provision.
You will provision liability, contingent liability, what?
Contingent liability.
Why?
Miss, because they're not sure if they're going to be paying.
So it's less than 50%.
Yeah.
Less than 50% is called what?
Contingent liability.
What is it called?
Um.
Possible, probable,
Oh yeah, yeah, yeah.
not
Below
probable,
50% is probable.
probable, or not
Yeah,
probable.
like miss, it's 50% to 95% probable. Yeah, and below 5% is like where it's not possible.
Below 5% not possible.
Yeah, and
Above
like
5
5
and less
to
than 50 is?
sorry,
Above 5 and less than 50 is?
above 5 and less than 50 is best. Let me think, miss. I'm not getting the word. Um,
You say you give take up, right?
yeah, it is probable.
So this is possible and
Miss,
not
but I
probable.
miss, but it's still 50%. Yeah.
It is less than
Oh,
50%.
yeah, yeah, yeah. 35. So it'll be possible.
It is less than 50%.
Yeah,
So it is possible,
yeah.
but it is not probable.
Right.
Okay. It is
Yeah.
possible because it is less than 50%.
Yeah, miss.
So it is possible but not probable.
Yeah, miss.
So what will you do if it is possible?
Miss, if it
Or
is
it is
possible,
outflow or inflow?
miss, we will have to show an outflow. Like we have to disclose the liability.
disclose as contingent liability.
Yeah.
So will you record any expense?
No.
Will you record any expense? No, you
Miss,
will
we'll
not
have to only
record any,
disclose it. Nothing more.
you will
Yeah.
not record it as any expense. Do you know the thing, accounting treatment for those things?
Yeah.
Your accounting treatments for outflow. If it is
Right.
report that is less than 50%, less than 5%, you ignore.
Yeah,
If
Miss,
it
right.
is between 5 to 50, possible. You
Yeah, Miss.
disclose it as contingent liability. If it is
Yeah,
50
Miss.
to 95, so what is possible is not probable, right?
Yeah.
So if it is not probable, you will only disclose it as contingent liability.
Yeah, Miss.
If it is probable, you will recognize as provision.
Yeah.
And if it is above 95, virtually certain, you recognize it as liability.
Mm-hmm.
So for this, you're not going to do anything, right?
Yeah, Miss, right.
Okay, fine. So now what are we expected to prepare? We've done all our adjustments. Now what are we expected to prepare?
Miss, Miss, right now we have to only like update it.
What do we have to do?
Miss, a corrected statement, profit or loss.
Okay, we have to prepare a profit or loss account. Okay. Come on, we will prepare a profit or loss account. I'm taking this image over here.
Yeah.
How will you start? Tell me.
Miss, we'll start by the revenue.
Just discuss it with me. I'm putting it over here. These
Sure,
are our
Miss.
working notes.
Sure,
So what
Miss.
is our revenue? Tell me.
Miss, our revenue is 370,000 right now, currently.
Minus.
Miss, minus the 3,000 working note we had made.
Okay. So this is our working note number 3.
Yeah,
Okay.
right.
Opening inventory of finished goods
Yeah, Miss.
would remain the same.
Yeah, right.
Okay, then
Then the cost of production, which we updated.
cost of production. How
Yeah,
much?
Miss. Cost of production we updated, yeah.
Yeah, see, working note number 4.
253. Yeah,
How much?
Miss. Miss 190,000 plus 12,000, and then we added the 25% profit.
We did not add.
Miss, like, yeah, we have to miss, but like in my calculator, I had added it.
So 250 to 500.
Yeah.
Then closing inventory of finished goods.
Closing inventory of finished goods. Yeah,
Then working
it's
note
there
number
as well.
4.
Yeah, it's there as well in the third one.
So sales minus cost of sales. This is our cost of sales. Opening
Yeah.
inventory plus production minus closing inventory.
Yeah, Miss.
This is our cost of sales. Sales
Mm-hmm.
minus cost of sales will give us what?
Our gross profit,
Okay, in the gross profit, what will you add?
factory profit.
Is your factory profit going to remain the same?
Yeah.
You're sure?
Miss, can I see the adjustments?
Yeah.
Yeah. The increase in provision. Yeah, there.
See, there was a 12% increase in the cost.
Right.
Yeah.
Yeah, Miss. Right.
Anything else?
Nothing much. No.
No. So your factory profit is going, because this is going to be added to the cost of production.
Yeah, Miss.
Okay. So factory
Miss,
profit
right.
will also increase by this amount.
Yeah, Miss. Right.
12,000 into 25%.
Yeah, Miss. Right.
So 3,000.
Yeah.
47,500 plus 3,000. Anything else?
No, miss.
Okay.
And then, yeah, that's it.
Okay. This would, you might get confused.
Yeah, man.
Then we did administrative expenses. What was
Yeah,
it?
we made the changes.
40,500 minus 12. So this is our working note number 1.
Yeah, miss.
28,550.
Yeah, miss.
Check properly.
Admin expenses. Yeah, that should be it.
This is 40,500 minus 12,000.
Okay, yeah.
What else?
Miss, admin expenses, what else?
The increase in the pupa was included in the administrative expenses.
Right. Miss,
So
but where do we get the values?
what is the pupa? Pupa is the factory profit included in the opening inventory and factory profit included in the closing inventory.
Okay, then that's how you got the
That is,
figures.
5,000 is the factory profit over here. Opening
Yeah,
inventory. If I make my pupa account, 5,000 is the factory profit included in the opening inventory.
yeah.
And what is the factory profit that is included in the closing inventory?
Let me check.
This is 22,000 minus 27,500, 5,500, and plus for the closing inventory, right?
Yeah,
Closing inventory was 1,400 minus 1,750. So this was another 350.
right.
So what is the increase in pupa? Or decrease in
500,
pupa?
850.
This is opening pupa. This is closing pupa. That means there is an
Research.
increase in pupa.
Yeah,
How much?
850. 850.
Increase in pupa is 850.
Yeah,
And what is done with the increase in pupa?
it's added.
What is the factory profit included in the opening inventory? 5,000. Yes.
Yeah.
And closing inventory is
5,500.
plus 350.
Yeah.
What is your expense for the year?
Expenses. Yeah.
Now understand one thing.
Yes.
Old pupa will be the pupa that is included in the opening inventory, and this is 5,000.
Yes.
New pupa is the pupa that is included in the closing inventory, and we had counted it was how much? 5,500.
Yes.
So there is an increase in pupa of how much?
Sorry?
So there is an increase in pupa of how much?
850.
So there is an increase in pupa for
850. Yeah.
500, na?
Oh, right here. Yeah, 500.
So there is
So
an
that's what
increase
they
in
subtract
pupa of
500.
500. Plus again, 350 was what?
Miss 350 was for the closing.
In the 350 was pupa included in what?
Closing.
It is the pupa included in closing. They have told us that Increase in the pupa was already included in the administrative expenses.
Right.
That means in this there was already an increase in pupa that is already included.
Yeah, miss.
Okay. Now we just have to add in that pupa that is not yet included.
Right.
They already did this. Old minus new. Okay, old
Right.
was 5,000, new was 5,500, and 500 is already included over here.
Right. Right.
Okay. Now, what is happening is that we have sold one goods on sale or return basis.
Yeah, miss.
So in that also there is pupa.
Yeah.
So there is 350 more pupa that is included in the closing inventory.
Yeah, miss.
Okay, so this has to be added.
Okay.
500
makes sense.
is already incorporated, the old minus new.
Yeah, miss.
It is everything about this new thing that happened
Yeah.
that we added to the closing inventory.
Yeah.
Okay, so this
Yeah,
350
miss.
has to be added. So our administrative expenses is 4,500 minus 12,000 plus increase in pupa.
Yeah, miss.
Plus increase in pupa, how much?
It was for the closing, yeah?
Included in goods of sale or return.
Yeah, miss.
Because other increase is already incorporated. So
Right.
40,500 minus 12,000 plus 350. So this will become 28,850.
Yeah, miss.
So administrative expense is 28,850. What is our distribution cost? 34,000
Distribution.
plus 4,000, 35,000.
Yeah.
So you will minus that and you will get your corrected profit. I'm giving you some time. Okay, just to do this yourself. I'm pausing the video. Make your full income statement yourself. Make your full working notes yourself and then go ahead.
Okay, miss.
Okay.
Yes.
Okay, let's go ahead. Which accounting concept is applied when you do the treatment of goods sent on sale or return basis?
Miss, is it realization?
Why?
Miss, because a sale should only be realized like once the transfer has been made from the buyer to the seller.
You do not recognize profit until realized.
Yeah, exactly.
Okay.
Until like it's
Until
transferred, yeah.
and you do not overstate your profits.
Right.
No overstating profits is what?
Miss, prudence.
Prudence. Very good. Explain your treatment of the legal proceedings in item number 4.
Sorry.
Explain
Explain
your
the
treatment of legal proceedings in item number 4.
Okay, Miss. So, Miss, you had said that Miss, that it's possible. So, like, it's
It's
below 50. Yeah,
possible
it's below.
but not probable.
Yeah.
Possible, that means it may happen. But it's
Yeah.
not
So it's
very certain. It's not more than 50%.
yeah.
Okay. So first you have
Mhm.
to say that it is the possibility to paying the fine or the likelihood of paying the fine is less than 50%,
Yeah.
which is
So it
possible
becomes
but not probable.
yeah, Miss.
So this
So
is
it
a
becomes a
contingent
contingent
liability.
liability. Yeah.
Okay. And it should be
Right.
disclosed as a note to comply with IAS 37.
Yeah, Miss.
Okay.
Yeah, right.
Come on, go ahead.
Miss, so like Miss, the whole answer would be framed like
The
it's less than
directors are
50%.
considering
Yeah.
stopping the application of factory profit.
Okay.
Advise the directors whether or not to stop the application of factory profit. If
Okay.
I apply for factory profit, that means my manufacturing department's profit I come to know separately.
Yeah, miss.
So I know the efficiency of my manufacturing department, whether they
Mhm.
are able to produce at a lower price than the outside price.
Yeah, miss.
So I can give bonus to my manufacturing staff employees or my factory employees, or give them performance appraisal if the cost of production is lower than the market price of the goods.
Yeah, miss.
Because the difference between the cost of production and the price at which you buy the goods from the market is the manufacturing profit, or I would say it is a factory profit.
Yeah, right.
So whether you should stop apply for the factory profits?
Yeah, miss.
Why?
Miss, it can be a good thing, miss.
Why?
Miss, because miss, it can help with motivation.
You said you should stop apply because it's not a good thing and it will act as motivation.
Miss, no, we have to give both positive and negative. Yeah, so I'm like starting with positive.
Okay.
Miss, so
If
like
you apply factory profit, what is a good thing?
if we apply it,
Hmm.
miss, okay,
What is factory
so
profit?
miss, factory profit is basically like the transfer value, miss, like when we like before they were adding 25%,
But what is
that's
factory profit?
it's cost plus profit.
So how do you get that profit? What do you compare with what to enable you, that enables you to know that you have made a profit?
Miss, the selling price with the cost.
No, that is gross profit. See,
Miss,
basically you're a manufacturer. You're manufacturing goods. Your cost of production is the cost at which you manufacture the goods.
yeah, miss. So do
Suppose you
we do selling?
manufactured goods at 100,000, but the same goods you're getting in the market at 125,000.
Okay, so it'll be cost of production with like the market price.
Yeah, so because you have manufactured the goods at your factory, at the factory level, you are earning 25,000.
Yeah.
This
So
is the
that'll be the
factory
factory
profit of
profit.
the profit because of manufacturing. So what do
Yeah.
you add in your cost of production? You add your factory profit of 25,000 and you make your finished goods at transfer value.
Yeah, miss.
And this is transferred to the income statement at transfer value.
Yeah.
So you account for this profit in the manufacturing account.
Yeah.
You get your goods at a price at which you're going to get in the market, and in your income statement, you find the profit of buying and selling, that is gross profit.
Yeah, miss, right.
So it goes to the income statement at 125,000.
Yeah, miss.
So now the manufacturers are considering not to account for this factory profit. So should they do that or no?
Miss,
Think. I'm giving you time. Till then, I'm pausing the video. Tell me, should you account for factory profit or no?
miss, you should account for it.
Why?
Miss, because accounting for factory profit will show that you're like manufacturing cheaper as compared to outside. So it'll help like motivate the people. And then like it'll also like miss, and now that you're making profit, you can like give bonuses to the employees if they
This
perform well.
helps you to show your factory profit separately. What
Right.
happened? What is the disadvantages of accounting for factory profit?
Miss, it can increase the accounting cost, miss, because like
Yeah, it
it'll
is
like make you do more work.
extra costs.
Yeah.
Okay, what else? Extra admin expenses.
Exactly, it increase your costness.
When you're accounting for factory profit, you set a rate.
Yeah,
And it is not possible that every year this rate is going to remain the same.
yeah,
Okay, so it is not possible that every year the rate will remain the same. The rate can increase or decrease.
yeah,
So it is very arbitrary.
yeah, right.
It will give you extra costs.
Yeah, miss.
The profit is as it is going to remain the same even if you don't account for factory profit, because ultimately in your gross profit you add the factory profit to get your total gross profit.
Yeah, miss.
Okay, but to act as a motivator for the employees, you should account for factory profit so that you can clearly bifurcate between profit earned at the factory level and profit earned at the
Miss factory
trading
and
level,
yeah,
at the
finance.
trading
Yeah,
level. So with
okay,
this, we complete our question number 1 of October, November 2023, paper 32.
okay.
Okay.